fundsupermart.com.
The team seeks to invest in companies that offer long-term capital growth and attractive dividend yields. What are the key criteria in a company selection?
Well, when I look for companies, I look for several things. First of all, valuation support. But for me, when I'm talking about valuation, it's not simply buying stocks on a low PE multiple or a high dividend yield. I'm thinking much longer term. So I'm looking at cross-cycle earnings metrics, for example, when I'm thinking about the valuation of companies. But that's a key part of what I do, the valuation side. I also look for what I call a margin of safety in the investment. So when I think about risk, I'm thinking about protecting the downside. And what does that mean in practice? That means I invest in companies with simple, understandable business models, with transparent financial statements, good franchises with strong balance sheets and good cash conversion. And I guess a question you can ask is, well, surely everybody's looking for those kind of businesses, and the challenge I face is to buy those kind of businesses when they're out of favour and therefore achieve that kind of exposure at attractive valuation. So that's essentially what I'm looking to do within the fund.
What are the key performers and detractors of the fund?
Over the last year, the key performance, I guess, has come from, there's been some good stock selection. I could go through certain names, but names like Sanofi, a healthcare stock in Europe, Kimberly-Clark, a consumer staples business in the US, a stock like Shimano in Japan. So there's been good stock selection, and that's come from various regions around the globe. And then in terms of sector positioning, I guess not owning any mining stocks has helped relative to the index, certainly. And a good exposure to those consumer staple businesses and healthcare businesses. Good quality, what I call good quality income stocks, which are being more and more sought after by the investment community, has helped performance because there's been a trend for those stocks to be bid up as people look for that kind of exposure.
More than half of the fund's portfolio allocation lies in US and Europe. With the macro uncertainty hovering around these two zones, how do you expect the situation to play out, and how would this affect the fund's returns?
Yeah, it's a good question. I would suggest there's pretty much macro uncertainty wherever you look around the globe at the moment, so not just in US and Europe. And the challenge for me is to measure that macro uncertainty against the relative attractiveness of stocks within those geographic regions. Now, looking at valuations, halfway through last year we made the call that Europe looked very attractive. As concerns with the Eurozone raised their head, people were very fearful and allocating away from Europe, and as a result valuations were pushed down to very attractive levels. So within a global fund you have the ability to make those relative calls. At the moment we don't think there are any standout calls. We've done well for that call on Europe, we've done well from our exposure in Japan. But as I sit here today, I don't think there's anything I'd be banging the table on in terms of relative geographic exposures. And that's reflected in the mix of the fund. If you look, it's very well diversified across geographies.
Thank you.